Good morning, everyone. It is Monday, January 24th, and this is Morning Market Movers, where we look at hotspots in the markets and take a look at some live analysis for day trading. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. Uh, Before I jump into anything, I do want to remind everyone, and let me drop this in there, that we are doing our boot camp tomorrow. So if you're not registered, we are doing day trading the stock market. It's going to be about equity indices. If you register, it'll get you access to the recordings. So please register and share with your friends as well. Everyone's welcome to join. It is a free event. What have we got going on today? We are going to be talking about oil because oil is moving. Interestingly enough, oil is moving to the downside, even though we've got the turmoil going on in Europe. And we're going to talk equities. Everyone's talking equities. Equities all looking to open green. We had a terrible week last week. The market
Red, not
got
green.
absolutely hammered. Oh, red. Did I say green?
You said
All in
green.
the red. Boo. Sorry about that. Everything
Sure
getting
to help.
hammered. We had a pretty hard week last week in the equities. Going to be continuing that into today. And we've got the Fed. I think that's got. Not only do we have geopolitical turmoil, we've got the Fed, who is starting a meeting tomorrow, but on Wednesday we'll make an interest rate decision. We're going to get a glimpse at how interest rate, what the Fed is actually thinking, and we might, be getting some timing on interest rate rises, and who knows, maybe they'll pitch something a little bit of a surprise at us. Before Brian and I jump into it, though, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so Brian, I'm going to flip it over to you. I think we could take a look at the commodities. I definitely want to be taking a look at oil. But let's take a peek at what we got. Let's look at the charts, look at some technical levels, and then clearly into the equities, because we do have a whole lineup of more earnings this week. We got Netflix at the end of last week, and it was pretty ugly. And then this week we're going to have Microsoft. We've got Apple, and we've got Tesla. So some big hitting earnings this week with the Fed in the background to boot. So
yeah. So I mean, right now, every week we look to see what the initial dollar trend is going into the week. Typically, like the last couple of weeks, it's typically been a dollar week kind of move in the European session, and then it picks up in the U.S. Europeans have been nothing but driving strength into the dollar, which is again typically that's the opposite of what we see now with the FOMC this week. That's obviously going to be the big linchpin. They're either going to lay out when they're going to raise, or they're going to sneak a raise in, like a small raise in. There's a number of different articles down here. They're talking about 4 raises this year, and what it's going to take. And again, that seems a little bit more bullish than a little more hawkish than what the Fed has said thus far. But we're seeing things start to run away, and we're seeing kind of small other kind of chinks in the armor. But then you see all of a sudden a day it's like, oh my God, we got to go. So, there's been a couple of headlines. Here's one about, it's going to, basically create more of a global debt crisis if they do it, but everybody's in that stage right now. That's one of the big factors, obviously, preparing for FOMC, although typically what happens is you see the FOMC, you see the dollar go down before FOMC meetings and in anticipation for that, but everybody's going early. So it would be one of those things where we have dollar strength all week, hit FOMC, and they don't give us when they're going to start, and then it drops. And there's a number of different reasons why they could say that it's going to happen. That's one of the big factors right now is FOMC. The other one is obviously everything going on with Russia right now. Interesting enough, now Russia is basically pointing the finger and saying, well, the Ukraine is concentrating huge forces near the border. It's like, because you threw 100,000 people there for the last 3 weeks. Yeah. And this weekend, I don't know if you guys saw the news, the U.S. has ordered all families and U.S. embassies to be evacuated. So never good when you're starting to pull your support staff and your resources out. not necessarily the best idea. They've said that they expect, that it's only going to take that one guy that like falls asleep and like throws a cigarette butt and something, pops,
right.
for them to
It's
start shooting at this point.
inherently dangerous to have
Yeah.
all of those troops on high alert. And not only are we pulling our families back, but we're also talking about sending troops into Europe. So
Yeah.
it's definitely escalating, and this isn't
Yeah.
pretty.
Yeah. I mean, do I think missiles are going to start shooting left and right? No, but there's obviously an end game in this one. I'm not privy to that information. I don't know that one, but it seems like with everything going on, thus far Russia is not backing down. Nothing that they've said. They want specific assurances that the U.S. is not going to just invade. I think if you look at history, the U.S. we are not typically the aggressor when we go into other countries. We are typically more reactionary. So I'm not quite sure.
Yeah, where they're coming from.
Yeah, the assurances are kind of weird, but I mean, again, there's no way to understand what happens in that government. I'm not from there. I don't claim to. I know people from there, and they think differently. I've actually worked for a gentleman that was Russian, and definitely an interesting experience, and thinks completely differently. So, not sure what they're thinking, but
it's
as
my
far as
experience. It's my experience. The people that complain about what other people are going to be doing are the ones that are actually doing what they're afraid is going to happen.
Yeah, I mean,
But
they've
Russia's
annexed
like,
people
I'm
before,
afraid you're
and they
gonna
have.
invade
Yeah,
because you're
right,
known for invading. The people that
right.
complain the most about something else, it's usually them that are actually committing
Yeah.
whatever atrocity or behavior is that. So
And
yeah,
then they're trading barbs back and forth. And, the Kremlin
yeah, it's just
dismisses
weird.
British media reports that Russia will stop gas supply to Europe if sanctions are imposed as false panic. I understand the statement until we get the as false panic.
Because
But,
it's real panic.
right. Yeah. Does that mean if there is sanctions, you are going to stop it and you shouldn't be causing panic? Because it's,
Double negative
this is a
there.
translation thing. Yeah.
Yeah.
Google
Well, let's take
Translator
a
doesn't
look.
always work, guys.
Let's take a look because I mean, oddly, we got oil selling off. Now, granted, oil was up
Yeah.
at $86 a barrel, and we're only now
Yeah.
down below 84. It's
Yeah.
still.
Yeah, and this is really, I mean, here's our 8:30 candle. There is our European session for oil. And again, is it going down because they feel that oh, you know what? Russia says they're not going to stop oil production. But was that they're not going to do it, or is that just it's not? You should stop causing panic. We are going to do it, so stop making. I don't know. Like it's an odd. Put it this way, it's an odd scenario. We're seeing demand rise across the board. We're not seeing demand destruction anywhere. We keep hearing about it again and again. But yet it is driving straight down. Now, this is not uncommon for the U.S. session. A lot of times we end up seeing, it goes straight down in the European session to start off the week, and then we turn in reverse. I think that's probably more the likely scenario. And again, some of the Middle East stuff is kind of dissipated as well, but having an actual headline out there about we're not going to cut oil supply off,
Right.
kind of a weird thing to see it go straight down, and again, it's starting to accelerate. So we do know that there are buyers in here in this 83.50ish range. So it is down to levels where we have seen buyers step in. I would say today probably figuring out how to get long this is more important. Again, everybody's so scared of rising interest rates, and the reason why is because everything seems to be doing well. But at the same time, everything's doing well. That means the demand for oil is going to increase. So
Yeah.
this is kind of going against what the fundamentals are right now. But again, whenever we see a large push to the downside, we typically tend to see the exact opposite. We tend to see
Look for that
strong
reversal.
movement in the other direction. So
Yeah.
again, pre-market, I'd be looking for buyers in here to go long. Do I have an exact area? Nothing really that I like down here, but I do think that this is going to come under fire this week, particularly if Russia makes any more comments about sanctions. Because at this point, I think we're past the sanctions. I think the last statement from Secretary of State is if one troop crosses the border, there will be a military response. So I think we've gone beyond sanctions now. Now, whether Russia believes we're going to do it or not, I think that's an entirely different story. So,
by the way,
yeah,
and to play some of these, I mean, there's different ways to play these levels in Nadex. The shorter duration binary option is certainly one way to do it. We've also adjusted some of our levels in our knockouts, so you can take a look. I mean, with the knockouts, you know that if it touches either the floor or the ceiling, you are knocked out of the trade one way or the other. So it's sort of a predefined trading plan baked in to force you to stop losses if you're wrong and take profits if you're right. Certainly looking at some of those levels in the knockouts could be kind of interesting, along with those binary options. So
Yeah, and looking at that, guys, I think they've busted three already.
yeah, yeah. I mean, you could see, right? It just keeps every time one gets knocked out, we another one gets.
Actually, all four have already been broken, so they've already chunked through all four of the original print contracts from last night. So yeah.
Yeah.
So again, having those smaller knockouts means they're going to break and blow through a lot more often. So yeah, so you got that one. And natural gas is another one. We're also seeing it. It's not quite as direct, although it is still down 1.8%. So kind of a big mover there. Gold is starting to flatline out as well, coming back down again. And it's kind of following. A little while ago, we were talking about how it was kind of more divergent. It was bouncing off that 1828 that we talked about last week. But silver is just, we talked about going down to 2372. It's there. It's pushed all the way down. They're really, and the Europeans step in right here. So they're not. The Europeans were not very big on the commodities whatsoever. So silver down 2% already this morning, also launching to the downside. And again, this is that response that we talked about. Gold and silver, great to have when inflation is rising, but when you're ready to crush inflation, it kind of loses a lot of its luster. And that's what we're seeing right now. And it's really, looking at everything, it's really risk off. Indices are down. We'll cover them. You're seeing crypto is down. Bitcoin is down 8%. Ethereum down just under 14%. Dogecoin down 10%. The VIX is up 13%. The VIX right now, this looks like a tech company in the 90s, right? This is just heading straight up. In the grand scheme of things, I'm going to put this on a daily chart just so you guys understand. Like, here's the VIX. And whenever the VIX is like this high, you're seeing, December 2021, that's where it was supposed to be bad. Then you're looking back to January 2021, and we knew what was happening there. And you look at these points, and, the VIX just doesn't go this high. This is typically it likes to float in this 15 range. That's where the average is. But then,
uncertainty.
Here's craziness. This is March 2020, and we're kind of halfway there. It's like, it's accelerating. And these are solid candles on a daily basis. Look at this. And again, there hasn't even been any shots fired. It's just the talk about shots fired has been just going crazy.
That
as well
and
as
the interest rates with the Fed. If they surprise us, there is a possibility that the Fed today does. Not only do they tell us, hey, by the way, in March we're going to do something. Who knows? Maybe they put a shot across the market.
I'm saying it right now. I just told you a little while ago.
Yeah,
don't be surprised if this magically goes up. If it goes from 0.25, because remember, I've been saying that we're going to probably do a double for the first one because inflation is just so high right now. It's such a huge problem. 0.5 is a big jump. That's a very, very large change. And again, I don't believe that the Fed thinks about this. Todd says that they don't. His opinion is they don't like really strong moves.
But
the easy way to do it is.
Yeah,
and there's going to be a shock because nobody wants rising interest rates. But an easy way to do this is to drop this up by 0.25 now. And then you can do a 0.25 later versus do it. Because everybody says it's going to be 4. There's only so many meetings. Going up by a double, which is really what needs to happen, that's a much bigger shock than if you do, oh, you know what? We raised it already. Because again, who else did it? New Zealand already did it. The UK already did it. Remember, UK was a surprise.
0.25 now and a 0.25 again in March to get us that boost and to break it up.
Absolutely.
Yeah.
Yep.
Who knows what they're going to do?
And again, I think that's what, again, the indices are all looking across the board. Look at this accelerating down. And normally, here, let's see, we'll go to 3 o'clock in the morning. Here's the European session. What do the Europeans care about the U.S. market? They don't. And look how much movement we've had already to the downside. The ES has got what? 93 points already to the downside on that one. That's quite a move already in the European session. We have some buying down here, but 4,300, there's not a whole lot. There's a little tiny level at 43.17, but I think 4,300 gets hit today.
When was the last time we hit it? Well, they want to hit it right. They want to hit it now. When was the last time we were back at 4,300? There we go.
October 2021.
Yeah.
So. NQ is the shocking one though. NQ, NQ has been beat up the most. It's already down 1.71%. Right. Here's kind of, and again, I stopped drawing a lot of these things because we just keep pushing. Last week we talked about potential buyers stepping in at 14,431, and they did. They ended up bouncing off of that on the 23rd, right? Actually, late last night, and they ended up popping up to it, and then forming a new base and starting this new collapse back down again.
14,000.
With this being right now at 14,160, there's one little hiccup at 14,054. Then 14,000 comes in. Yep. So I would say look for 14,000, and again, 14,000 is not just a 500s or 100. It's a big one. There's 3 zeros in that. that is a large psychological level. The media gets on that about how bad this is, plus interest rates, plus everything else. I mean, right now the NQ and the Russell are both fighting for the worst pair today. None of it looks good. On a technical, again, on a technical kind of learning piece, because I love to add these. Remember, we talked about this area of buying. It came in and base, then blew through. Every touch means it has less of a chance. When a zone gets broken, what do we look for? Harry Potter trade. One candle base, pulled back, based, and then continued its push down. So even if you didn't feel good about this one, right? If you're looking to get short and you're like, oh, there's buyers there, I just don't want to take it short. I want some confirmation. I want to feel a little bit safer about this. Again, use those old levels. This is the exact, this is really textbook, right? One candle base, two candles to pull up, and continue push to the downside. So already this morning, and again, that was about 7 o'clock. Nice little trade in there. I would say on a 15-minute, we got 30 minutes, but I wouldn't step in front of this one until 14,000. And I actually don't even have a level until probably down in the 13,900 level before we get something clean. So, NQ is not the darling that it used to be. This one I'm kind of tracking the way down. I'm trying to find some zones. Right now in the YM, we had that 50% last week, and it hit once, and then the second one kind of blew through a little bit. But I've drawn a new top on there. Right now, if this was the exact bottom, we do have a little bit of a level around the 50%. But I'm wondering if we'll drive down a little bit more, probably into the range here. And I do have zones down here at 33,400. If we do push down into there, you can see that the 50%, this middle line right here, there's some basing there. So right now, and again, I don't have an exact bottom because it's not in yet, but
right.
If this does come down to the next level that I have, which again, these tend to push, and this would follow the ES and the NQ, if we pull back up again, I do have a level that's sitting right up there, right around the 50, which I will be looking for, and it will be something that I throw an alert on. So that could be something for later. As of right now, it's kind of right in the middle, and we do have levels a little bit higher. I think if we do suddenly take a big turn right now, I think 34,335 is an area where we had it marked off. There's a basing. There's a little bit of confirmation there as well, and a drop. But the next little area is probably going to be this hiccup down at 40, right around 34,050. Yeah, right around 34,050 for YM. And then Russell, same thing. I know Russell is fighting the NQ right now for the worst. It's 1.93 versus 1.83 down.
It is not a pretty open.
Russell is just the same thing. Here was our fib from last week. We missed the 50% by I think a half a point or 1 point. That's why Nadex is great sometimes, because when you get close, it also depends on where the strikes are. But now we got to draw a new set of fibs on this one. So let's pull. We'll just pull that one off. We don't need it now because it's old. But we're going to draw right from that top to where we are now, and kind of doing the same thing. Right now, it looks like if it turned right now, if this was it, this was the bottom of the day, it looks like the 61.8 is probably the better area to take shorts off of. But the reality is this one. If we go back, I'll bring this back up to 30 so I can actually find it.
Right. It's going to take you a while.
Russell is just, the last time, and we didn't really spend a lot of time down here, but the last time was January of 2001. It's been a year since it was down here.
Holy cow. Yeah. That is
a year.
An entire year wiped out.
Yeah, and we were down there. Let's see. Yeah. It wasn't, and it came from above, so it's not even, a full year. 2004, yep. Or I'm sorry, not 2004, January 5th, 2021. So it's been a long time since the Russell's been down here. And remember, this is justified. Rising interest rates are going to hurt the small businesses the most. And again, the Russell is more of the small ones. But if we do find a bottom, the Russell should be the one that you can see kind of a telltale sign that we're potentially bottoming for the U.S. market. We should see it first here. If anything, I would say that the NQ I'd remain weak. And look for pullbacks. Right now there's not. Unfortunately, it's just it's a waterfall right now. There's just not a whole lot to even look for a pullback. So again, drop the 15 minutes, see if we can stabilize. And, who knows? Maybe if we stabilize right now in the next 15 minutes, we take a little bit of a pop. And, again, it gives us the ability to come up and kind of get in. And then maybe at 10:30, we get a little bit of buyers coming back into the market and a little bit of positive news higher. But it is earnings. I know there's been some disappointments out there. But disappointing earnings, inflation of 40-year highs, and rising interest rates. It's not a good recipe. So,
and geopolitical instability. So there is certainly volatility in the markets. Nadex binary options, great way to play to get into the price action in a limited risk way. So you can't absolutely blow up, but you can get in on that price action, and there is going to be plenty of price action across the board. With that, any questions for Nadex, please email us customerservice@nadex.com. Questions for Brian, you can catch him at support@keeptradingsimple.com. My email is up there as well. We are here to help. Anything we can do to help, please email us. Let us know. I want to remind everyone, I've got the link up there. Tomorrow is the boot camp. Please register. It will give you access to the recordings. And please feel free to share that with your friends. Again, if they can't join on tomorrow, they can certainly catch the recordings if they're registered. And this morning, the market's looking weak. Geopolitical instability. We got the Fed who's going to start a meeting tomorrow and give us that announcement on Wednesday. And we're going to get a glimpse into when and how quickly interest rates are going to start rising. To top it off, we've got earnings this week, and some big ones too, particularly in the NASDAQ with Microsoft, Apple, and Tesla all reporting this week. It's going to be an interesting week. We're all set up for it. Brian and I will be back tomorrow. We'll try to help you along on your journey with that. Good luck at the markets, everyone. Thanks for joining.